Sunil Subramanian also joining in. Sunil, you've looked at all the conversations, you've looked at all the statements. I want to ask you, do you see any merit in the allegations?
No, I think that prima facie, it doesn't seem to be, it's more like a witch hunt rather than a factual thing. I think that it's a reaction to the show cause notice, and they want to, I wouldn't say divert the attention, but I think that they want to protect their client list. You see, what happened in the previous Adani disclosure that they did, their clients couldn't make much money. And remember, this Hindenburg thing, they are neither a non-profit nor are they an investor protection company. Okay, the main thing is to make money for themselves and for their clients. The shorts they take, they're supposed to disclose. And SEBI's show cause notice also says that they have not done the proper disclosure of the shorts, and they want a response for that. Besides this, their customers would have also, see, when the beauty of this whole thing is what, when they release the report, before that, they would have given the intimation to their customers to take positions. And then the report gets released, the market reacts, that's when they make money. So I think that this is a bit to restore their credibility, that help their customers make money by releasing some news which can create some kind of a panic, and hence their customers can take short positions and make money off it. So to me, having read the Hindenburg report as well as both two disclosures by the SEBI chairman, I'm convinced that this is more like kind of a defense, just putting up a defense to divert the issue. The main thing is they still have not replied to the show cause notice on the previous matter.
So that's an important part. They haven't replied to the show cause notice. Vikas, I want to come back to the first thing you said in your statement about how this is really an attempt to shake up the faith of investors in Indian markets. I mean, just on Friday, you've had the highest SIP contributions in the history of Indian equities at 23,000 crore rupees. The number of households who have reposed faith in Indian equities is larger than ever before. And then something like this comes in. Now, there are two ways of looking at it. One is that, of course, if there is any concern in the system, we should address it, right? And the other one is that this is a concerted attempt at attacking that faith.
There are two issues. If you ask me 10 things, I will tell you what to do in improvement in our system. That's a very different thing. I'm not saying our system is perfect. We will have 10 issues. But all I'm saying is that, this is not something done with the right agenda or intention. It is vested interest driving the agenda. I think markets have moved much beyond that. Our markets are far, far more matured. I think Indian investors have expressed the faith in Indian markets over last decade, and it is only getting better and bigger. And SEBI has done a fabulous job in protecting the minority shareholder, retail shareholder, their interest through various mechanisms, regulatory framework, transparency, disclosure, governance, So I have no doubt that Indian markets are very, very robust. We have best systems, right? So I mean, let's not link again two things. I think Indian market story, we will keep improving. We are not perfect. We will keep improving. We will do much better. We are much better than many other markets. My only limited point is that don't connect these two things. We can have a separate discussion what we need to do to improve our Indian markets and Indian regulatory system. That's a very different conversation. But somebody coming and highlighting that our governance standards are poor, SEBI chairperson is conflicted, we are not doing it. And this is all complete baloney in my opinion. I think one needs to be just ignored. And I think markets will ignore it tomorrow.
Yeah. What to do tomorrow now is a question that we must answer for our viewers. Sunil, for people watching who are wondering what is going to happen in the market, should they go long, should they go short, what should they do when there's volatility? What is your advice?
Oh, I would say to both an SIP investor and to a mutual fund investor, there's no need to panic. Individual equity stock investors, to the extent that they have been buying stocks based on fundamental approach, not a technical based approach, I would say any correction in their holding, they should add to it tomorrow, because good quality stocks have all become very expensive over the last years, 2 years, because of the liquidity flow. And any correction there means you're getting good quality stocks at a cheaper price. So any correction, they should buy good quality, fundamental, sound stocks. At this stage, mutual funds, they will obviously act with caution, and they will continue to buy good quality stocks when there's a correction. So buy on dips is the strategy which will play out well. And I think that this episode we will soon overcome it. And hence, long-term investors should not panic. If they have free liquid cash, 1% or 2% of their cash they can actually deploy when there's a correction, but make sure that you're buying good quality businesses. That fundamental factor one shouldn't forget even in this time, because there are some things which ran upon technical which could correct far more sharply, but they shouldn't jump in to buy that which has corrected a lot, but rather buy good quality companies even if they don't correct that much.